The top business stories live from the Sky News City studio. We have breaking news on the Manchester United takeover situation. Our City editor Mark Kleiman will be with me. What impact will the jailing of former crypto king Sam Bankman-Fried have on confidence in the sector? And the world's biggest company, Apple, has reported its fourth consecutive quarterly drop in sales. Good morning, this is Business Live with me, Ian King. Well, we start today with breaking news on the future of Manchester United Football Club. Our City editor, Mark Kleiman, has been following this story throughout, on top of the situation, and he's got some more news now. Mark, what have you heard?
Yeah, that's right, Ian. It feels like a significant development in the ongoing saga, the nearly year-long saga over the future of Manchester United Football Club. Now, what I can reveal today is that Sir Jim Ratcliffe, the Ineos petrochemicals billionaire, is going to pledge to invest $300 million. That's about £245 million of his personal wealth in investing in Manchester United's ageing infrastructure as part of the deal that should be announced this month that will see Sir Jim acquiring a 25% stake in Manchester United. Now, of course, at Old Trafford, United's home for decades, does need significant investment. It will need much more than the $300 million that Sir Jim is initially pledging to bring it up to the standards that have been set by competitors such as Manchester City, Spurs and Arsenal in recent years. But this will be an indication of Sir Jim's financial commitment to Manchester United. I understand that this money will come from Sir Jim personally. It will not be increasing in any way United's existing borrowings. Of course, United has the feeling of a club in crisis at the moment. Its results on the pitch this season have been mediocre at best, and the men's first team faces a crucial week ahead, a Premier League trip to Fulham on Saturday, followed by a crucial Champions League tie away at FC Copenhagen next week. That could go some way to determining the fate of the first team manager Erik ten Hag. But one of the concerns that United fans have had during this year-long takeover saga has been whether the purchase of a stake from the Glazers will also lead to further investment in the club. And this revelation this morning that Sir Jim will commit £250 million or thereabouts to investment in Manchester United's infrastructure will go some way, I think, to addressing those concerns.
All right, Mark, thanks for that. Now, the so-called crypto king, Sam Bankman-Fried, is today facing decades in prison after being found guilty of a $10 billion fraud. A New York jury took just 5 hours to convict Mr. Bankman-Fried, founder of the crash crypto exchange FTX, on 7 charges, including wire fraud, conspiracy to commit securities fraud and money laundering. It's a huge fall from grace for the 31-year-old who at FTX's peak was worth billions of dollars and who rubbed shoulders with the likes of Bill Clinton and Tony Blair. But will it rock the confidence of cryptocurrency investors? Well, joining me now is Jason Tucker-Feltham. He is the founder and chief executive of Venrai, a leading digital asset compliance advisory firm. He's also a member of the Global Digital Finance and Industry Membership Body that promotes the adoption of best practices for crypto assets and digital finance technologies. Jason, welcome to you. Were you surprised by the verdicts?
I mean, not particularly surprised. I don't think many people were. I mean, obviously, he pulled a real swift one with the crypto industry, but also with some very, very sophisticated investors. And, you know, I think ultimately what it boils down to is that this is a sign that the industry is in need of regulation. And we're starting to see the start of regulatory frameworks, both in the UK and the EU. And in addition, the SEC in the United States are taking the industry a lot more seriously. So I think this could be the start of a big change for the crypto industry.
I mean, you mentioned regulation, effective regulation. I mean, what seems to have been at stake here was that money that was supposed to reside in FCX ended up in Alameda Research, which was the company's sister firm. A lot of people would be surprised that there wasn't ring fencing of those assets in the first place.
And this is what it's all about, right? There needs to be some distinct rules for the use of crypto assets, in particular when they're being used on behalf of retail consumers. So there does not appear to have been any sort of ring fencing of those assets, and the use of those customer funds would appear to be fraudulent. So yeah, without the same sort of regulatory requirements that you see in the traditional financial system, it's fair to say that we would see repeats to these by bad actors. And so there do need to be some sort of roadblocks in place to avoid this happening again.
Was the fraud made easier by the fact that crypto assets, in the jargon, are fungible?
I don't think that is the key issue here. I mean, any asset could be used for fraudulent intent, and I think the core issue here was that Sam Bankman-Fried had ultimate flexibility as to how he dealt with these funds. Ultimately, he was overseeing FTX, and he had a romantic relationship with the person who headed up Alameda Research, and he exploited that power in order to do what he wanted to do with customer funds. So, you know, it doesn't matter what asset class was at hand, just because it was a fungible instrument doesn't necessarily mean that if it wasn't a fungible instrument, it couldn't have been used for fraudulent intent.
Now, the amount of money being raised by crypto and blockchain startups really fell off a cliff subsequent to FTX's collapse. Are you seeing a recovery yet?
I have seen a strong recovery in the market. I mean, we are seeing a Bitcoin price which is roughly at the highest point it's been in around 18 months. But still, it's roughly 50% down in its all-time high of close to $70,000. So we're looking at a roughly $35,000 Bitcoin. But there does appear to be renewed confidence in the space. There does appear to be new investors getting in on the game. And ultimately, a lot of the interest has been derived as well from the US speculation that a US Bitcoin ETF is on the horizon. So we've got a long list of applicants, including BlackRock, that are awaiting a decision. And perhaps that decision will be made in the coming months.
Is investment needed more in the industry infrastructure itself? I mean, obviously, crypto exchanges like FTX?
I think more mature participants are needed in the industry, and we are starting to see traditional institutions actually invest directly in infrastructure and own entities that would serve crypto users. But ultimately, there does need to be distinct rules. What are you allowed to do in the space? Because even the banks, the big banks, need rules. And unless it's written down in clear English, you're always going to have parties which misconstrue some of the rules. And, you know, there are casualties along the way if those rules are misinterpreted.
All right, Jason, we have to leave it there. Good to see you this morning. Thank you.
Thank you.
Some other business news stories for you now. And Currys has agreed to sell Kotsovolos, its retail business in Greece and Cyprus, for £175 million. The buyer is Public Power Corporation, which is a leading power generation and supply company in Greece that has been looking to diversify into new business areas. Well, Currys said the sale proceeds would be used to cut debt and reduce its pension scheme's deficit. Kotsovolos was founded in Athens in 1950. It now has more than 90 stores in Greece and Cyprus. Shares of Currys have risen by more than 5% on this morning's news. And shares of Wickes have risen by nearly 2% this morning after the home improvement retailer reported a growth in sales volumes for the first time in more than 2 years. Wickes said that during the 13 weeks to the end of September, its core like-for-like sales, which is the measure that excludes the impact of new store openings or refurbishments, were up 1.1% on the same period a year ago. David Wood, the chief executive, said Wickes had seen strong demand from trade customers during the period and have been encouraged by greater stability in DIY. And administrators to the failed door and windows manufacturer and retailer SafeStyle said this morning that the company would continue to retain a stock market listing despite going into liquidation. Well, SafeStyle collapsed on Monday when 680 employees were made redundant with immediate effect, with another 70 or so remaining to oversee the running down of the business. But the stock will live on as a so-called cash shell, providing a cheap and quick way for a private company to obtain a stock market listing in future. Now, Apple last night reported its fourth consecutive quarterly drop in sales on the back of weaker takings in China. The world's biggest company said that in the 3 months to the end of September, sales came in at $89.5 billion US. That was down 1% on the same period a year ago. Well, the company, which in September launched 4 new products in the iPhone 15 range, is facing tougher trading conditions, in particular in China, where central government employees were recently ordered not to use iPhones for work, and where rival Huawei recently returned to the market with new high-end phones powered by Chinese technology after having been shut out of the market for several years due to US tech sanctions. Well, joining me now to talk about this is Arjun Kapal. He's CNBC's technology correspondent. Arjun, good to see you this morning. Is this all about China, or are there other factors at play here?
Yeah, so China was definitely a drag on results. Revenues were down in China, but there were other parts of the result card that weren't so good. iPhones managed to eke out about 2.5% growth, but actually iPads, Mac were all down. Wearables, so that's the Apple Watch, that segment was also down, and that dragged down really overall results for the company.
And the other thing that spooked investors was the outlook statement for the Christmas trading period was not that great.
No, that's right. And this is the all-important holiday quarter, the December quarter for Apple, where people are going out buying the brand new iPhones, and their company saying that it expects December quarter revenue to be very similar to last year, i.e. implying flat growth. Now, analysts in the market had expected the company to say it's looking for some growth, around 5% or so. And the fact that they're signalling slow or flat growth suggests that perhaps demand for those brand new iPhones aren't as strong as many has thought, even though management on the earnings call was saying that so far the iPhone 15 is doing better than the 14.
I mean, this is the first time in more than 20 years that Apple has seen 4 consecutive quarters of declining sales. Is it just running out of ideas?
There's many who would say, well, what's the next big thing for Apple? And, you know, they point to the new mixed reality headsets, the Apple Vision Pro, that is expected to hit the market next year, but those are retailing about $3,500. So those won't necessarily be the next mass market thing. One of the interesting things with Apple is the fact that it has managed to get this ecosystem of users. It's got over 1 billion people using iPhones. And what that means is it can continue to sell them the new hardware. But also, one of the interesting bright spots in the report card was the services revenue. This is things like the App Store, iCloud, all these things that people buy on top of the iPhone. Services revenue was up 14% year on year. And just get this, it's an $85 billion business in Apple's last fiscal year. So it's huge. And that's where investors are looking at Apple going, well, look, even if hardware sales are slow, even if people aren't buying the iPhones, they can still manage to get money from their customers.
Yeah, not quite a dull utility yet. Arjun, good to see you this morning. Thank you. Still to come here on Business Live, we'll have a look at how the markets are doing this Friday morning. Stay with us.
And now it's coming from both sides, and it's moving this way.
Only about half a mile from the Turkish coast, and it's evident that is the boat seriously overcrowded. This is one of the most severe viruses in the world. I'm Alex Crawford, and I'm Sky's special correspondent based in Istanbul. That's it. It got us then. There's a lot of action going on, a lot of hits coming in still. We aim to be the best and the most trusted place in news.
Clearly not had very much to eat at all. A lot of them extremely thin and very frail. Look at her arms. I can put my entire hand round. This is the cocktail of drugs which the doctors at this hospital have been giving their coronavirus patients. Made for people who want clarity in an uncertain world.
Mother Nature can be vicious, absolutely savage. The world's largest falls now down to a trickle in places.
I can't imagine how much plastic is lying at the bottom of this huge lake. Whoa!
Close and personal with a rhino. This is what makes the job so fantastic.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Well, last night, solid showing on Wall Street, during which the S&P 500 enjoyed its best one-day gain since April, was followed by gains for all of the main stock indices in the Asia-Pacific region overnight. Some pretty healthy gains there, as you can see. The main stock index in Pakistan, meanwhile, hit an all-time high. That was after a visit from an International Monetary Fund mission and confirmation of election dates. Well, in Europe, stocks are currently in mixed territory right now. Talking points this morning include BMW. The share's up 3.25% in Frankfurt after quarterly earnings came in ahead of expectations. Well, here in London, the FTSE 100 is going into the weekend more or less unchanged as things are right now. The oil majors are weighing on the index somewhat. Shell has clipped some 15 points off the index on its own, so the FTSE would be in positive territory were it not for Shell's contribution this morning. Among the gainers, Smith & Nephew, BT and J. Sainsbury, all continuing to attract buyers after their results yesterday, all of them up around 3% or so. While Kingfisher, the owner of B&Q, and Screwfix, that's up by nearly 3.5%, I suspect on the back of that update from Wix that I mentioned earlier in the programme. Outside the FTSE, the brake disc supplier Surface Transforms is down by 32% after cutting its annual sales forecast. On the foreign exchange market, well, the pound and the euro are in line to chalk up weekly gains against the US dollar amid growing conviction that the US Federal Reserve has finished raising interest rates. Sterling up 1/6% against the dollar right now, more or less unchanged against the euro. The single currency, meanwhile, up by around 1/4% or so against the dollar. Well, the oil price is having a quiet session so far this morning, but it is on course to suffer a second consecutive weekly fall. Barrel of Brent crude currently changing hands at $87.16 a barrel. That's up a little under 0.2%. Well, joining me this morning is Sophie Lund-Yates, the lead equity analyst at Hargreaves Lansdown. Sophie, good to see you this morning. BMW, interesting development there.
Hi, good morning. Yes, so BMW have actually surprised on the upside, which is a nice change from compared to a lot of what we're hearing from the automakers at the moment. So their automotive margin in particular was better than expected, and that was at about 9.8%, which is not bad showing for a car maker. And really what we're seeing is quite a resilient showing, and that is because of their position at the luxury end of the market. So they are not seeing pressure to reduce their prices, particularly in electric vehicles, where they are actually really quite a leading force there. And also, this is kind of a trend that we've seen play out in other names. You know, we heard from Aston Martin yesterday. Their average selling price is at around £234,000 now. And what we're seeing essentially is a lot of resilience at the luxury end of the car market, and BMW is kind of bearing the fruit of that.
How much more investment do they have to pile into electric?
So it's definitely not going to be cheap from here, let's put it that way. The R&D expense is not going to be on a downwards trajectory. But they do actually have a leading kind of placement in the electrification of their vehicles. They're certainly ahead of the likes of Aston Martin with their fully electric rollout as well. So they are further along on that journey, which means that actually looking at the investment landscape from here, it's a little bit more palatable than it is for some of the other players.
Yeah, now on this side of the English Channel, not a lot of corporate news around today, but Currys stood out.
Yes, absolutely. So I think you were mentioning earlier that Currys is up about 5%. And what we're really seeing, essentially, is that investors are breathing a sigh of relief. They've decided to sell their Greek and Cyprus business. And the reason that this is important is they're going to be getting net cash proceeds of around £156 million should this disposal go through. And that's going to help them pay down what is quite a substantial debt pile as well. But more broadly speaking, of course, we are heading into the festive trading season. It's not that far away. And really what I'd like to see is a proper sustained momentum in their sales over the festive season. Things are really hard. Those operating margins are around 2% at the moment. 2% is not a lot of room for breathing room. So that's really what I'll be monitoring as well. But this disposal gives them a little bit of wiggle room.
Yeah, I mean, the other thing that struck me about this deal is the buyer. It's the Public Power Corporation. I mean, it's basically the sort of equivalent of someone like, Southern Electric buying this thing. I mean, if you're a shareholder in this, and this was a UK company, you'd be going absolutely spare.
Yeah, it doesn't have the most natural synergy. I think that's probably a perfectly fair assessment. But, looking at this, you can see the market reaction from the Curry shareholders is they're quite keen to get this off the books. They really like the idea that this is going to go through. But certainly, as you say, it's not the most straightforward of options, I don't think. But we'll see. And hopefully, particularly where Curry shareholders are concerned, this is going to go through and help really meaningfully sort the balance sheet out, and potentially some surplus left over as well to be returned to shareholders. So that's the other big one to be watching.
Yeah, now very briefly, Starbucks caught your eye. What's the story there?
They did. So Starbucks have released their earnings, and this is a really important one on the consumer side of things. And actually, they have surprised on the upside. So we might be buying fewer gadgets, as you were talking about Apple earlier, but we are actually still really sticking to our coffee orders. And they've outlined a new plan for growth as well, which is going to be based on analytics, and a great deal going on there, and just frankly a lot more resilient than people were hoping for, which is really quite interesting when you consider the cost of living environment that we're in at the moment.
OK, Sophie, got to leave it there. Good to see you as ever. Thank you.
Thanks.
Bit of breaking news that we can bring you, and it regards the parents of Humza Yousaf, the Scottish First Minister. You'll recall that his parents-in-law are in Gaza and have been since the Hamas terrorists attacked Israel at the beginning of October the 7th, and led to a response from the Israeli authorities. Well, Humza Yousaf's parents-in-law, we understand, are now out of Gaza. I'm sure we'll have more on that throughout the morning here on Sky News. Now, while the UK has been hosting a summit on AI this week, other tech industry leaders and policymakers have been meeting in the Saudi Arabian capital, Riyadh, for the Global Cybersecurity Forum. With the global cost of cybercrime set to hit $2 trillion by the end of this year, up from $500 billion in 2015, one of the key themes of the event was how to promote real international collaboration in cyberspace at a time when the troubled geopolitical environment is increasingly pitting governments against one another. Well, one of the speakers at the event, keynote speaker, was Mary Aiken, Professor of Cyber Psychology at Capital Technology University, Washington. And she joins me now live from Dublin. Professor Aiken, welcome to you. Was this forum a success? What were the sort of main outcomes?
It was very successful, actually. You had global leaders coming together, thoroughly debating the issues, and lots of resolutions going forward, and tackling cybercrime was top of the agenda.
Now, cyber attacks were up some 38% over the last, I think, on just 2 years ago. Is this a problem that businesses can solve alone, or do governments really need to get involved here?
I think, we've had 50 or 60 years of cybersecurity, and cybersecurity protects your data, your systems, your devices. It does not protect what it is to be human online. And what we see is the majority of cyber attacks are actually facilitated by social engineering. And social engineering has everything to do with psychology and very little to do with technology. And this was the theme of my talk in Riyadh. In fact, I've just landed this morning, flying back overnight. And what we've seen is the importance of actually, providing safe passage for humans in cyberspace and actually focusing on online safety. And in fact, the UK is leading in that regard with the Online Safety Act, and also developing the UK online safety sector. And I've worked with the UK Gov for many years in this area.
Oh, so what can other countries learn from the UK experience?
Well, first of all, the UK is one of the first countries to create this spectrum of harm, online harm, which ranges from cyberbullying through to harassment, through to cyber fraud, through to mis and disinformation. And with elections coming up, particularly in the US, that's a critical area to think about. But in addition to that, a whole sector has been established. We've about 4 years of research reports that have helped to build this sector. And the sector will be focused on delivering tech solutions to tech-facilitated problem and indeed criminal behavior. And in 2022, the Paladin Capital report established the US safety tech sector and found evidence of an emerging billion-dollar sector. And I was PI on that report.
I mean, you mentioned the US election, of course, which is around about a year ago, a year today, I think, roughly. Potentially, we've got a UK election, South Korea. I mean, there are 20 big elections globally taking place next year. Do you worry about the potential ability of malign actors to influence the outcomes of those elections?
Well, we're always going to have that. The question is not about the perpetrators, it's really how we deal with it. The problem with online harms, online criminality, online mis and disinformation is that it has the characteristics of big data: volume, velocity, variety. What does that mean? There's a lot of it. And therefore, we're going to need AI solutions and ML solutions to it. And that's what safety tech can deliver. We've got health tech, we've got fintech, and now we've got safety tech. And in fact, we've got an AI and safety tech summit coming up shortly in the UK.
Right. And you'll be participating in that, I presume?
Absolutely. My
All right.
discipline, cyber psychology, can really help to, illuminate this space and provide solutions.
All right, Professor Aiken, we have to leave it there. Thank you very much indeed for joining me, especially after such an arduous overnight flight. You look in better state than I would have been after that, I'm sure. Thank you.
You're welcome.
That's it from me for the time being. I'm back with our afternoon edition at 4:30. Hopefully see you then. In the meantime, do stay tuned. We'll have more, no doubt, on the release from Gaza of Hamza Yousaf's parents-in-law. Do stay tuned for all of that. See you later. Cheerio.